Much of the conversation, as you know, here at the New Economy Forum has been about the present. You just heard plenty from David and from John. It's also been about what happens in the next few months and the coming year, and of course it should, because that's what's on our minds. But there are some other things on our minds, and so I'd like to begin by asking our panelists and asking you, the audience, to take a break for the midterms for the next half an hour and to look much farther out. As you probably know, my three panelists run organizations that have successfully adapted, evolved, and thrived for many years, in part by anticipating the future and planning far ahead. So here's what I'd like them to do. Panelists, if you would please, tell us, what forces do you see shaping the political systems, the markets, the economies in which you operate most dramatically? And also, if you can, look a decade out and tell us what you think about the world will have changed most profoundly. Christine, if I may ask you to begin.
Thank you, and good afternoon to all of you. We generally at the IMF don't look too much into the future. We look, 1-2 years ahead. But we recently had to do an exercise which actually forced us to look at 2030. 2030 is the date by which Sustainable Development Goals, which have been agreed in 2015 between all nations of the world, should be achieved. And they're contained in 17 principles, which have to do with eradicating poverty, giving access to everybody, for everybody to water, reaching equality between men and women, eliminating war and tensions, haha. And we had to do an exercise of actually costing what it would be for the low-income countries to get to those sustainable development goals in 2030. So what I can tell you from that exercise, which informs me a little bit, is that there are a few things that you will simply not change in the next 10 or 15 years. And that has to do with demographics, because, for at least a generation, 30 years roughly, it's not going to change. And you're probably not going to affect much the consequences of climate change, despite the fact that many countries have agreed, the COP21, and have agreed to cap the increase of temperature. And it doesn't look very, very pretty, and it certainly looks like it will cost a lot of money. That I can tell you for sure. So that would be my initial take on it. Demographics, you can expect that parts of the world that we think today are thriving and doing well will have aged significantly, will have lost a lot of working force, and we should be prepared to opening up a bit more to immigration, as it is feared at the moment. And there are other parts of the world, such as the African continent, which will, not in 10 years, but in a little more, will have gone from nearly 1 billion inhabitants to 2 billion inhabitants, and where most of the key problems of the world, which have to do with climate change, with drought, with migration and dislocation, are actually located. So we have to prepare for that kind of a world.
Henry and David, the roles you occupy in your firms are different from what Christine does at the IMF. Prognosticating, if you will, is part of the business planning process. So Henry, why don't you tell us a bit about how KKR sees the world evolving. Christine just shared with us some of the forces that she thinks and the IMF think are going to change the world by 2030. What about you?
Well, first of all, thank you for having me here. As we look out, you've got to divide where in the world you're talking about. Asia is obviously totally different than the U.S., and Europe is even different than the U.S. Let's focus on the U.S., where I'm from, and there you've got an aging population. Those over 65 are going to outnumber those under 5 years of age at some point down the road. So what does that mean from an investment standpoint? Well, it means that you've got a real opportunity to focus on investing in healthcare, wellness programs, better food, travel, leisure, technology that is going to enable people to do their banking and insurance much more easily. And so we are focused on what is the demographics, what role will demographics play there. Obviously, if you're back here now in Asia, your millennials are, about 6 times the number of millennials in the U.S. They'll play a very important role. In the U.S., if you ask most millennials, do you think that you're going to be better off than your parents or your grandparents? The answer is probably not, with exceptions, obviously. Here, it's totally different. The millennials in Asia will be significantly better off than their parents and their grandparents. So when we think about it, we're in the investment business, and we try to make decisions based upon where we think the puck is going, as they say in hockey, as opposed to where it's been. So our focus is very much what do we see as far as demographics. So let's go on from there. So next, which I think is very important and critical, are ESG issues. We focus a lot on environmental, sustainable, and governance. And that's going to play even a bigger role, in my view, in investing than it has in the past. That will continue to grow. The millennial population and Gen Z very much feels that this is really important. It's not just dollars and cents. It's, do you have a purpose in your company? Are you doing the right thing as far as the environment is concerned? Are you making sure you're taking care of the employees and so forth? So there's a lot of factors that will go in. Where that will lead in 10 years, I don't know, but I can tell you today our focus is very much on those couple areas, and I can go on for a long time on other areas.
Well, why don't we give David a chance to jump in and tell us what he sees, and then we can get into some of that. David.
Sure, and thank you for having me also. I'm happy to be here. I listened to Christine and Henry, and you said 10 years, and what's interesting to me is 10 years is actually not a long period of time. And so I imagine if we were sitting on the stage 10 years from now, we'd still be talking about these same issues. And
I'd be retired.
Well, hopefully I won't.
You too?
But in the context of the big challenges that we face and the constant evolution in the world, I think there's evolution, not revolution. And moving forward on some of these issues that both Henry and Christine identified are going to be long paths, long roads. I think when you sit as the CEO of a business and you think about your business and how your business is positioned, it's hard to take a medium-term view and not really recognize how technology, AI, digitization is having a profound impact on everybody's business and will continue to impact businesses in a very meaningful way. And so, I think the lens you have to look for if you're trying to plan is to say, how are these things going to evolve my business? How is it going to evolve the experience that my clients or the end users of our products and services have? And how do we adapt to that? That takes disruption and the ability to look at your business and say, we're going to do it differently. That takes investment, serious investment, which is not always easy. And I think as I look out and I think about the way the world's going to change, we have businesses that are going to be massively affected by these things, and we have businesses that aren't. And I think if you look at the world broadly, that's kind of the template you'll see for most of the world.
So I have a few things I'd like to know from all three of you about what the world might look like 10 years from now. And we'll make this kind of quick, a lightning round if you like. Will the U.S. still be the world's dominant power?
No.
Christine, will the U.S. still be the world's dominant power 10 years from now?
I mean, if you're talking economy, I assume.
Well, economically, militarily, diplomatically.
Militarily, yes. Economically, no.
I don't know. It will be a key player, but I'm not sure it will be the dominant player.
David.
The U.S. will be extremely important economically, politically, militarily, whether or not it's the. I mean, you use the word the. I'm not sure it's the. In some ways it is the today, in other ways it's not. But I think 10 years from now, the United States will continue to play a very meaningful role in the world.
I'm going to touch on an issue that has come up multiple times over the course of this past 2 days, but again, it's with an eye toward the future. Will we have a global trading system or something more balkanized, even an economic iron curtain of the variety that Hank Paulson warned us about earlier this morning? Christine.
Well, we'd better have a global trading system. We'd better have it, I'll tell you. You know, if you look at history, and I know you want us to look into the future, but the future is informed by our history. And if you look at what happened before, we're just about to celebrate the centennial of the First World War. And you have to look back at how it all happened then. And it was, you know, the peak of globalization and everything being equal. There was massive movement of people, capital, goods, services across the world at a slower pace with less technology, less information and all the rest of it. But it was peaking at that time. And, you know, I very much hope that we have a global trading system and that we have a system that is more open, which requires more cooperation because it doesn't only apply to the goods that are moving around the world and the supply chains that we have, but that it applies also to services, because all those societies that we've been talking about will be moving into 85-90% services, and many of those societies that are still growing because of agriculture, because of industry, will be moving into services as well, and that is still strongly restricted as we speak. We need more openness and a different kind of trading system, but it better be global, because otherwise I think that what we're facing is pretty bleak.
You're nodding, Henry.
Yeah, I absolutely agree with that. The only comment I'd add to that is I think supply chains are going to be much more regional than they are. I think a lot of manufacturers will move supply chains closer to home. For example, Mexico, I think, will be a beneficiary of that. And you see a number of companies now moving product out of China, going to lower value-added product, going to Bangladesh, Vietnam, Malaysia, et cetera. I think you'll continue to see that.
David.
I mean, I'd echo the comments made. The one thing I'd add to the conversation is we might have to go backwards to go forwards. And so it might, unfortunately, there's a risk, given where we are today, looking at the world today, that we move away a little bit from an open free trading system to ultimately move forward. There's some risk to that. Now, I hope that we move in that direction. I hope there's no conflict and standoff in that process.
But you can't bet on it as a
certainty. You can't bet on it. It's not baked in the cake that in the distribution of outcomes, there's not an outcome that some of the nationalism that's developing, just as a student of history, you'd have to go back and say, this can get very off track. Now, I don't think that's likely. I don't think that's expected. But I'm sure, hopefully, we don't go in that direction. And it's a good warning for all of us to recognize why we live in one world where we need to cooperate, we need to be open, and we need to continue to move in that direction. It's very hard to go backward.
I'd probably add to that the importance of migration, immigration of people. And I think what will end up happening at some point right now, you talk about nationalism and how countries are now, closing their borders. We're going to have a shortage of workers in different countries. And to me, that's a real threat down the road. Take the U.S. alone, I think you've got almost 6 million job openings right now. Now, there's a lot of reasons why you have so many job openings compared to typically you'll have 2 to 3 million job openings. There. And so I think we're going to need immigration, and we're going to have to encourage it.
Yeah, I agree with you. But equally, I think we will need education even more so than... we will need migration. I mean, it is already the case with several countries, Japan being one that I can think of in the vicinity. Well, not that close, but which clearly needs badly new labor, and where there is massive shortage of labor because of this aging of society. But I just want to throw education in this picture, because if in the next 10 years we don't invest massively in education, we will have a need that can be filled by migration, but we will also have lots of people that will be displaced professionally, that will not be prepared to be mobile, that will not be prepared for those new technologies that will change the future of work. from what we know it today to what it will be, and don't ask me what it will be, but it will require people who can actually use their brain, because many of the repetitive tasks and many of the routine jobs that human beings are currently doing will probably be discharged by robots, machines, or other technology-driven and artificially intelligence-powered things. So education is going to be an absolute necessity. This country, Singapore, Vice Premier is right here, sitting there, knows it well because he was Minister of Education, is succeeding enormously because it has invested so massively in education. And we have to do that the world over in developed and developing countries alike.
Before you follow on that, because I know you want to, Erik, I want to come back on the demographic comment because you asked us to look out.
Yes.
If you're looking at 20 to 25 years from now, and given demographics drive so much of economic activity and economic growth, we all have to recognize that the footprint of the world is going to look very different 25 years from now in terms of where the people are and who the people are. And we're all going to have to adapt to that.
Yeah.
And that'll be a profound shifter.
You'll open offices in Africa, I bet you.
We have a few at the moment,
Yeah.
but my guess is we'll have more.
Yeah.
What I was going to follow up on is a question of optimism. You're absolutely right that the world needs immigration. Countries like Japan need immigration. Look, obviously we've seen for the past couple of years an immigration crisis unfolding in North Africa and Southern Europe. But Japan, up until some small changes very recently, has been very resistant to immigration, and the world, for the most part, hasn't followed Singapore's lead on education. So do you have any reason to believe that these realities are going to be accepted, observed, and acted upon by the countries that face the greatest and growing pressures?
Well, if we don't do that, we'll face major hardship and clear threats to the way in which societies are organized. And you referred to the migration crisis out of North Africa. It's not just North Africa. It goes way
Yes.
further down because of the terrorist threat around the Sahel, down from the Sahel region. And if we do not invest, if we do not educate, if we do not create the circumstances where people will be hopeful for a future in their countries, those waves of immigrations will continue and will be very difficult to manage and to politically accept.
Henry, you gave us a taste a few minutes ago about how KKR specifically is responding to these forces that we see and perceive reshaping the world in which we live. Give us a little bit more, if you will. You've been running your firm since 1976.
Right.
So you've seen a few things come and go, and you've tilted and shifted strategy along the way. How is strategy changing? That's what some of these people in this room would like to know from somebody like you. As you absorb these inputs and digest this vision, if you will, how do you change strategy?
Well, it's interesting. It's probably one of the hardest things that I find to get across to all of the people that are at KKR. You know, change is difficult. General Schatzker, who used to be Chief of Staff of the Army, has a wonderful saying in which he says, if you don't like change, you're going to like obsolescence a lot less. And it's so true. And so we're constantly reinventing ourselves, changing. We started out, for example, as a pure private equity firm, started an industry back in late 60s, and then started KKR in 76 to do just that. Today, that's about 40% of our business is all. We're global. We have a credit business, and we have a business in real estate and infrastructure and capital markets and so forth. And you have to change. You just have to do that. We're set up in a way that makes, I'm very proud of what we put together 42 years ago, and that's our culture. And culture, to me, is probably the one overriding thing, and I'm sure David would agree with this, that is going to be here 10 years from now. The companies must focus on their culture, their values, no matter which direction that they take. We started the firm with a culture of inclusion, where every single person at KKR participates in absolutely everything we do, whether you worked on a transaction or not, whether you're in Sydney or in New York or someplace else in our many offices. And the reason we did it was that so everyone would be helping each other. So when people invest with us now, they get the whole firm. And so this we think will continue to hold us in very good stead. It also enables us to go into new areas. And people say, well, that's great because that's going to help my business over here.
So, as you mentioned, it started out in private equity. You built a credit business. You're building a real estate business. Can you see what's next?
Just do it better.
But you don't see a need for further evolution.
Green finance rising?
We actually are doing that. We've made a lot of investments already in green finance, environmental impact companies. That's where ESG plays such an important part, Christina, in every investment we make. We've got a whole team at KKR that focuses on ESG. I don't think today you can make an investment intelligently unless you're going to think about that. That's very important. It's important to not only the company, it's important to governments, it's important to people that give people like us money.
David, you're a month and a week into your new job as CEO of Goldman Sachs. You have an opportunity to redefine strategy. How are you doing it?
Well, the firm's been around for 150 years, and at the core of everything we do, our business is focused on serving clients. And we have a variety of different clients, that we serve. Historically, it's been an institutional firm, and our focus has been on corporations and governments or on institutions. We've done very little with individuals. We're starting to build businesses because technology allows us to use platforms to bring financial products and services to individuals in a more digitized world, and we think that's an interesting opportunity for us given where we sit. But at the end of the day, while there's an evolution in our business, at the core, we're trying to provide advice, capital raising services, risk management services to our clients. And that, I think, is pretty consistent and is not going to change a lot. The delivery mechanisms can change. So if you look, for example, at our equity trading business, a business that we've been a significant player in for a long time, if you go back 15, 20 years ago, we had 6,500 people in that business. Big institution wanted to sell block of stock. They spoke to a person. That person spoke to another person inside this firm, who spoke to a person, at the stock exchange, who then spoke to another person at the stock exchange, and so the circle went until it came back. And today that business runs with about 2,000 people globally. There are pipes that connect all our clients to the firm, to the exchanges, to a variety of trading pools, and basically it's a digital platform. There's still some bespoke risk intermediation that's part of the business, but you're trying to, what clients want is high quality execution at the lowest possible cost, and it's our job to deliver that to them.
What about the footprint? You mentioned earlier the fact that demographics and immigration are going to reshape where people are, and population growth in places like Africa. Does Goldman need to change its footprint as a result?
Well, we're a pretty global firm, and I think one of the advantages we have as a large financial institution is that we have scale and we're global. And I think in the businesses that we're in, while you can win regionally and in certain niche positions, in a number of the businesses, there's a huge advantage to scale and global. It's what our clients want and need. Most of our clients are global companies that operate globally, operate in multi-markets. They move capital around the world. They allocate capital around the world. And so scale and global matter. Now, to the topic of continuing to expand that footprint, as Christine points out, Africa with a 25 or 30-year view is very, very interesting, but it's still in the context of global GDP and capital allocation still relatively small. So with a 25-year view, yes, I think the footprint will continue to expand. With a 3 to 5 year view, less so.
I mean, I could just comment as a fairly large customer of Goldman Sachs for many years. The importance of that global footprint, the importance of being able to talk to one source there and get communication around the world, get capital around the world. Size is also very important for companies, and that's a big advantage that the big banks have, and that is that they've got plenty of capital, and that's important.
Christine, strategy means something different to an organization like the IMF than it does to a commercial enterprise like KKR or Goldman Sachs. You've coined a term that I would like you to explain, and perhaps this is an appropriate time to introduce it into the conversation, a new multilateralism. What does that mean?
Multilateralism, as it is coined today, is strongly associated with what happened after the Second World War, when in Bretton Woods and beyond, nations decided, and some smart men, there were only men in those groups, unfortunately, so things have changed. But some of those wise men decided that it was not a good idea to solve issues by going to war and killing each other, and that economics was at the heart of some of the massive passions, frustrations, tensions, and decided to reorganize the relationships by building the United Nations, the World Bank, the IMF, the GATT, which were then succeeded by the WTO. And that set of institutions has actually served the world quite well over the last 70 years. And I would note that over those years, it has morphed into, certainly my institution, the International Monetary Fund, has morphed into something different over the course of times. Because, the fixed exchange rates that we were monitoring in the early days are long gone. The gold is not playing the role that it used to play. And there are areas which would never in a million years have been considered as macro-critical, such as contribution of gender to the economy, such as the role of inequality in respect to sustainable growth, such as the fiscal consequences of climate change, which are now regarded as mainstream business for an institution like mine. So, although it has evolved over the course of time, I believe that it has failed in some respects, and we should learn from those failures to be, as I sort of summarize it in a very unfortunate way because it requires much more explanation, it has to be much more focused on people, because I believe that we have paid too much attention to general principles, to numbers, to aggregates, and have not yet focused sufficiently on people. It has to be much more result-oriented. So I would like to borrow this result-orientated philosophy that the business has in order to make sure that we actually have traction and deliver in those institutions. And I believe that it has to be inclusive, with that as a bit of an obsession, because if anything has failed, many things have failed, but in terms of the global trade system as we have it and the international trade that we have, we have failed in excluding some people, not the majority of them, because international trade has massively boosted economies, productivity, innovation, lifted hundreds of millions of people out of poverty and blah, 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 blah. We all know the story. But it has also left people by the side of the road, which have felt completely emasculated, completely dislocated in their own self-esteem, and are now fueling this sense of discontent and frustration that is really good compost for some strange theories. So that's why I call for this new multilateralism, which embraces goods, services, people, capital, but in a way that is far more inclusive, that is more focused on people, and that is result-driven. That's what I would love to see.
That's great. I just add one thing, because that is absolutely terrific. Agree with it 100%. What I think business has not done as good a job of communicating what they do, because business does a lot of what you've talked about. You think about it, and you can go through, where are jobs created, how are they created, how, and we don't do a particularly good job of talking about what we are doing for society, and there's too much focus today on what are we going to do next quarter. And this short-termism, to me, is one of the worst things that's happened to corporations. It's all people focus on. They don't really care what you're going to do 3 years, 5 years from now. And, corporations, I think, do a terrific job in most cases in training. They could do a better job in training, but they're doing a good job in bringing people along, and they don't talk about it.
David, you share these concerns about short-termism. I've now heard them from Henry. I've heard them from other people. Larry Fink was here earlier today. I've heard them from Larry in the past. I've certainly heard them from Jamie Dimon and Warren Buffett. What about you?
I share the concern. I really liked what Christine said. It resonates with me, and I think it's something we all have to think about in the context of what we do, in our corporate professional world, how we contribute to those goals and moving society forward that way. I agree with Henry that corporations can do a better job. All of us can do a better job talking about what we're doing to contribute positively. But I would also say that I think, broadly speaking, corporations can do more to share the responsibility, that we have to our communities, to our stakeholders, to our employees, and there's room for continued improvement and investment in that while delivering for your shareholders.
In what way?
It's part of. Look, I think at the end of the day, if you're taking a medium or a long-term view, where I was going with that as you asked about short-termism, if all you're worried about is your quarterly earnings, it changes your propensity to invest. It changes your propensity to make decisions that might be, in the long run, really to benefit your shareholders, your community, your stakeholders. And there's got to be a balance in all that. And I do think the incentive system, particularly for public companies, has pushed to a much more short-term oriented result. And it's contributed to the fact, at least in the United States, the average CEO operates for 4.5 years. And so if you look through that lens and you figure you have to make your mark in a positive way, and just in the distribution of outcomes, you have 4.5 years to do that, you're pretty incented to move short-term rather than to really think long-term. And I think about my own responsibilities as I enter my new job. I think about businesses that have been built at Goldman Sachs over decades. We're starting new businesses that certainly they won't come near to reaching their potential until long after I'm gone, but it's in a 150-year-old company, it's our responsibility as leaders to invest for the long term. And communities, society, employees, everybody gets a benefit from that.
Christine, you interact with the CEOs of public companies all the time. Do you agree with this analysis that they are on balance, too short-term focused? And if that's true, how would you fix it? How would you change it? One suggestion that a number of people have thrown out is getting rid of quarterly reporting. I'm not sure you've given it a ton of thought, but since it's come up in this conversation, makes me wonder if short-termism is a problem. How do we fix it?
Well, I think short-termism is a problem. Quarterly publication is probably an issue, but the nature of the publication is also an issue. And I believe that what Henry was referring to in terms of what good is produced in addition to profits and salaries and dividends and what have you, that is hardly ever commented upon. I mean, turn on any of you excellent channels, there's not much talked about. Maybe it's because the companies are not talking much about it, but I think it should be at a much higher level of communication and disclosure and assessment in how companies are rated. We talk about these things, and it gives us good conscience, but it's not happening in reality. Plus, second point, people are generally driven by their own personal situation and future. And to your point, David, when people know that they have a longevity of 1.5 years, they're going to be short-term focused. You can't blame them. So how that is changed, I don't know. I can't help thinking of Pullman.
Paul Pullman from Unilever.
Paul was his back against the wall, and yet he was doing all the right things. And he had to really fight long and hard to prove the point that he was making, which was that you can actually run a profitable business and be concerned about the future and be driven by longer-term objectives. He had a tough time surviving, didn't he?
Right.
That's where there should be a coalition of the willings to actually support these initiatives.
Quarterly earning, the discussion, and I know a little bit where you were going about changing quarterly reporting. That's not the solution to this is much more complicated than changing reporting to twice a year instead of 4 times a year. It has to do with incentives. It has to do with balance, and it's complicated. It's not easy. Shareholders are right to demand performance, and companies need to perform for their shareholders. But we have to think over the long run. As we've allowed the system to tilt in one direction, how do we bring the system back a little bit to center? And I think some of the things that Christine's talking about, some of the things Henry mentioned, the more you can measure, think about those things and the benefits they have, the more maybe we can move the balance back a little bit.
And bring more women to the business. That is an imperative. It's true.
Absolutely.
Huh?
No. And that actually leads into something that's very important, and that is diversity of the workforce today. I think the financial institutions, particularly in the U.S., are slow in coming to that. We're all trying to play catch-up right now, whether it's diversity of gender, ethnicity, or even, for that matter, thought. And that's a little easier is the last part, but absolutely agree. All the studies that I have read show that those workforces that, particularly at the executive level, that are more diverse, have much better results.
Absolutely. But yet, 2% of women only are CEOs in the financial sector, and 20% executives are women.
Yeah, and we lost 3
There's a gap.
this
There's a
year
big
in New York.
waste of talent.
We haven't gone fast enough, and we have to go faster.
Yeah.
Yeah.
Well, since I hear a little of applause already for comments very well made, this is a perfect opportunity for us to end the conversation on a positive note. I'd like to thank Christine Lagarde, Managing Director of the IMF, David Solomon, the new CEO of Goldman Sachs, and Henry Kravis of KKR for joining us here at the New Economy Forum.
Thank you.
Thank you.